Hello traders, Gary Wagner here. It is 12:46 in Honolulu, 5:46 in New York on Wednesday, 23rd day of November 2022, and this is the daily report for gold and silver, our weekend review, in that we will be closed in celebration of Thanksgiving holiday and return with our daily report on Monday. The Federal Reserve released its minutes from the November FOMC meeting, and that did cause gold to rise. Gold basis, the most active December contract, is currently up $10.60 and fixed at $1,750.50. Volatility that occurred before that at 8 o'clock Eastern Standard Time, when we saw a $20 move, taking gold to its intraday low today of $1,719. Gold closed just off of the high, which was $1,754.90. Dollar weakness greatly aided the move that we saw in gold today. Gold gained about 0.6%, but the dollar lost a full percentage point, with the dollar index currently fixed at 106.04. Lastly, silver gained a very respectable 2.59%, with the most active December silver futures contract currently fixed at $21.59. This first chart that we are looking at is a daily chart of December gold futures. You can see that today's activity is represented by this single long candlestick, and this is the representation of it trading overseas at 1752.50. However, it was the low that occurred at 8 o'clock Eastern Central Time, hours prior to the release of the minutes, when we saw this huge spike down that effectively stopped us out of our long gold trade. We went long at 1743. We were stopped out at 1732.90, which resulted in a loss of $10.10 per ounce. I do not believe that I have ever cited market manipulation as the primary cause for our stop being executed. But as you can see on this 5-minute chart, this one large candlestick right here that represents the market moving from 1740 at the high to 1719, and that's where it stopped us out. You can also see that that wild market gyration in terms of price occurred well before the FOMC minutes were released, which is why I believe in the case of today's price action, there was market manipulation, and that manipulation effectively stopped us out. Most importantly, I believe the intent of taking the market to $1,719 this morning was to effectively knock out all of the longs and take gold prices to a much lower price so that they could enter the market from the long side. That being said, I am still exceedingly bullish. As you know, I believe that we got our first indication once we hit a triple bottom after a series of lower highs and lower lows, and for the first time since March, actually had a higher high than the previous high. I believe that gold is now in a rally mode and will continue to move higher throughout the end of this year and into next year, which is why it is critical that over the Thanksgiving holiday, we develop the proper strategy to re-enter at the right price on the long side, as I believe that this rally could take gold as high as 1,800 or 1,825, which is based upon this high that occurred in the middle of August. This has been Gary Wagner, wishing you, as always, good trading. I apologize for not being able to deliver that to you on this trade. Have a great holiday weekend. We'll talk to you on Monday. Bye-bye.